Thank you so much, Chamberlain. Good morning, everyone. Welcome to Business Morning on Sunrise Daily. Yes, we'll do business for just about 30 minutes, beginning from the global oil space. Prices inched up during Asian trade on Wednesday, and that's despite surprise jump in the United States stockpiles driven by geopolitical risks. That is heightening at this time from the Middle East, the conflicts and forecast of an eventual inventory drawdown during the third quarter peak demand season. Looking at the numbers, very huge movement, almost 0.5% for each of them, if we could have that number right there. So we see Brent up 0.48%. Meanwhile, since we've seen that jump, a huge one, 0.48% to $85.42. WTI even more, 0.57% up at $81.29. You know that the market is up to something when you see both Brent and WTI in their 80s. But that's what's happening there. And we said earlier that is obviously driven by that very increasing geopolitical risk with Houthi attacks in the Red Sea. Yes, the Red Sea is back in the news, and mounting Israel-Hezbollah hostilities in Lebanon. They are bullish for oil, and we've seen that driving oil prices at this time. Now let's come back to Nigeria, see what's happening there with the Naira. Not good at all, not good at all. I guess we relaxed a bit thinking that we had hit a kind of 70 when it comes to the value of the Naira, because we've been seeing about 1,008 for 3 weeks now. Well, unfortunately, yesterday by the close of trade, the Naira dropped, lost 0.71%. You can see getting close to a whole 1%. And then for NAFEM is 0.31%. So it closed at 1,579. Can only imagine what's going on in the parallel market at this time. Open at 1,490, while for NAFEX it's 1,492 Naira 71 kobo after it opened at 1,488 Naira. Will this attract the CBN? You know, we're saying yesterday how for about 3 weeks now we've not got intervention from the central bank into the market, both in official or the BDCs. Will this attract them? We'll be watching to see, even though we did get that assurance from Mr. Cardoso, the governor of Central Bank of Nigeria, yesterday also, that the Naira is stabilizing and things are going to be well. Well, we'll see what the numbers tell us at the close of trade today. Now, reactions are still trailing the 24.99% increase in Nigeria's public debt. We had that some days ago. In response, the Director General of the Debt Management Office, Mrs. Patience Oniha, said that the rise in Nigeria's public debt stock is partly due to new borrowing, which we know we talk about it almost every day, as well as ways and means that was securitized. You know, so figures from the DMO indicates that for the first quarter of 2024, public debt stood at 121.67 trillion naira, and that shows an increase of 24.33 trillion naira from 97.34 trillion naira that was reported in December 2023. All the contributors, according to Mrs. Oniha, are interest rate as well as new borrowing. And of course, we know the value of the dollar also contributes to that. But we'll talk about that in a couple of minutes. First of all, let's hear what the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, is also saying about this. Seems Nigerians are getting worried again about the issue of debt and the level of debt. So he says that there's a positive balance despite outstanding debt. He was speaking after the week's Federal Executive Council meeting, which took place in the presidential villa in Abuja. The minister says that the federal government does not rely on ways and means in order to fund itself and also reducing its debt burden.
The total debt stock of Nigeria in US dollar terms fell by 15%. That is very positive. We are focused on ensuring that the revenue that is due to the federal government is collected robustly, using technology, avoiding the blockages which manual processing can cause. And it has led to a very robust revenue effort. We do not rely on ways and means to pay salaries. We don't rely on it to pay debt service, external debt servicing, or other obligations. That is the situation. The finances of Nigeria have been revamped. The glass is half full.
So the glass is half full, not half empty. I guess some assurance is coming from the manager there, the coordinator of the economy. So is the manager of our economy coordinating other aspects of it. We're going to have a conversation on this. But first of all, let's have that slide showing status at this time, talking about the public debts. If we could have that, looking at the level that it's the last time it was reduced. Yeah, that's this one. So we have our public debt at this time, a total of 121.67 trillion naira. And well, the worry is that by December, it was at 97.34 trillion naira. By fourth quarter of 2023, that's by December. So you see the jump there of about 25%. That's why, eyes are going back in the external at 56, and then domestic at 67. Even this week, there was a Eurobonds auction at the fixed income market. So, and we've seen a very active fixed income market in this administration since last year. I think, no, from this year, we've seen a whole lot of fund raised from there. So that makes up a huge part of this domestic. Then the states, Lagos State has the highest commercial capital. I guess they are most active. And some people would say, well, it's not about the borrowing, it's about what it's being used for. If it's being used to boost economic activities, then it will take care of the debt at the end of the day. So we had Lagos with the highest of about 929.41 billion naira. And then the state with the lowest is Jigawa with 2.07 billion naira. Obviously, there are some states in between. Delta is one of second highest when you look at following Lagos right there. So there you have it. Let's take a short break. When we come back, okay, all right. Before we go on that break, we have Professor of Managerial Economics, Professor Emmanuel Abolo, to help us dissect these numbers and tell us some of the implications. Professor Abolo, good morning, and thank you for your time this morning.
Good morning. Thank you very much. It's my pleasure to be here this morning.
Great.
To dissect this.
Yeah, so we see the numbers, and we know the worry. The worry is that from December to now, Nigeria's public debt has gone from 97.3 to 121.6. And the DMO has come to explain that, of course, there are new borrowings, and then we know there was the securitization of the ways and means. And then we also had the minister also telling us that, well, we should look at the glass as half full, not half empty. What do you see? Half empty, half full?
Thank you very much for that brilliant question. Yeah, the coordinating minister has provided some clarity to say that Nigeria's public debt, fell from $108 billion as of December 2023 to 91 billion as at March. Let me be very clear. I think the minister ought to explain that very clearly, to say that this is due to exchange rate fundamentals. The value of the naira had depreciated so massively, and therefore the so-called fall in external in debt in dollar terms is neither here nor there. You need to account for the exchange rate fundamentals. Currently, the exchange rate is at about 1,400, 500 naira to a dollar. Compare that to December. So it's very clear. Let's not play with figures. There is no significant decline in terms of external debt, public in terms of public debt in dollar terms. Now, explanations can be provided by the DMO. The coordinating minister can provide explanation. Even the central bank itself can provide explanation. But looking at these figures, you will see clearly that the burden, I mean the value, the amount of debt generally, I mean it's very, very significant. It's very, very worrisome. It's very, very worrisome, and I think it is time to begin to interrogate, the implications of this huge debt. I think that should be the focus here. So any explanation can be provided. The point is, These debts are just too high for this economy. That's the truth, period. Now, what are the implications? Maybe I should leave that to you to begin to ask the question, but I've interrogated the numbers to say that these are huge. And of course, the DMO has
maybe you
tried
should give
to
us the
explain
implications,
that,
Prof. Maybe you should just go ahead and say the implications.
Okay. Before the implication, let me be very clear. DMO, the central bank governor, they will explain that we are still within normal limits, whatever that means. That yes, the figures are 108 billion, that we are still within limits in terms of the debt GDP ratio. But you see, when you run a country, you are not looking at the upper threshold. The upper threshold. So if the international institutions, international community says that the debt GDP ratio is should be 200 billion, and now you are at 108 billion, so you beat your chest that you are still within normal limits. And I think that is a very, very weak argument, very, very weak argument. So let's try to interrogate some of the implications of what we are putting ourselves in this country. We're in an abyss when it comes to this issue of public debt. We're in an abyss. One of the implications is the fiscal strain this excessive debt is going to put Nigeria into. We look at the servicing cost. It's been reported, and the figures are there. You will find that the servicing cost of these debts is even outpacing the total revenue of government. So you have a huge budget and fiscal deficits. So that is going to put fiscal strain on government, fiscal strain on Nigeria. Then of course, the huge debt is also going to crowd out. It's going to crowd out public investment in critical areas of the economy. And that is going to slow down economic growth and development. In terms of currency and inflation, we can also mention that the high debt can lead to serious currency depreciation. That's what we witness. But of course, we say we should thank the central bank that there has been some stability, but that exchange rate, 1,500 naira to a dollar, that is extremely very high for this country. So there are going to be currency risk, because part of the component, a major part of the component of the debt is the external debt. Let's look at that. You see, when there is exchange rate volatility, you are going to be facing currency risk. So they need to explain to us how they are going to mitigate that currency risk. So when you begin to have excessive external borrowing, of course, someone had argued that in terms of moratorium, in terms of the cost of borrowing and all of that, and the issues of tenor of external borrowing, that seem to be good. But I think that is a very weak argument. There are serious currency risk issues, and government needs to explain how that is going to be handled. What about vulnerability to the external sector? When you borrow externally, you are subject to external sector vulnerabilities, and we need to have the right the right framework to be able to handle issues of external debt vulnerability.
Yeah, so Prof, let me just come in there, Prof, and look at the domestic. We've seen the government, I believe, is intentionally looking inwards. So it's more of domestic debts. At least for the first 6 months of the year, we've seen the fixed income market really busy. Doesn't that give us a little bit of relief, saying that debt servicing, instead of going with the dollar, which we see at some point really strengthened, doesn't that reduce our debt servicing and also give us a little bit of reprieve as Nigeria?
Are we looking at the unintended consequences? So even when you are borrowing domestically, you are saying you are borrowing in naira. You are going to use this money to fund, according to you, to fund infrastructure. Now, what are the components? What are the elements? Those infrastructure, you are going to import them. You are going to import the materials, you are going to import the iron, import so many things. So even when it is
I think we do have a network fluctuation right there with Professor Emmanuel Aboli was going to tell us that even though we can, maybe it's a bit of relief to say it's domestic borrowing, so it doesn't, the servicing of that debt does not increase as the value of the dollar strengthens, but we still do have some prizes or disadvantages also borrowing at all. But I mean, a lot of economists would actually say that borrowing isn't bad in and of itself, but what are you using the borrowing or the loan for? If it's being used to boost economic activities, then, it might as well be a positive thing. I don't know if we have the prof back now. Professor Abolo. Oh, okay. Well, unfortunately, I wonder if we'll be able to conclude that conversation. But this is obviously an ongoing conversation in Nigeria, the issue of debt and the movement between the fourth quarter of 2023, that's at December, where we had it at 97.34 to more than 121 trillion naira in January, a source of worry. Prof, are you back? Can you hear me?
Yes, I'm back. Apologies for that.
So you were going to explain some of the implications of even the domestic debts, which we think will cost the government less. But you say it has other consequences.
Yes, macroeconomic fundamentals, they interact. They interact. There's no way you are going to isolate them. Everything is connected. Everything is. So you are discussing this within a systemic framework. Everything is connected. So let's not deceive ourselves by saying, yes, we are focusing more on domestic debt. But the question is, how are you, the domestic debt, which is in Naira, you are going to also import items in order for this infrastructure development and so on. So there's no way you are going to escape from the exchange rate implications and the exchange rate impact on domestic debt. But I think it's very important to just stress, we should stop borrowing. We should stop borrowing. Let's not try to be explaining and putting things here and there to explain. Let's stop borrowing for now, at least for 6 months. The country will not collapse. Excessive borrowing since 2017 or so, if you look at the figures, the trajectory and the trend is worrisome. Can we just stop? Now, other implications of these huge debts, whether domestic or whether external, you put all of them together, they're into one bucket. You're going to constrain, the government is going to constrain itself in terms of policy articulation and policy management. What do we mean here? When you have very high public debt, you are going to limit your ability to use fiscal policy to stimulate the economy. Because there are two main types of policy. You have the monetary policy and then the fiscal policy. Studies have shown that when you have huge external debt, you are going to constrain yourself, when it comes to the fiscal space.
But Prof, yes. let me ask, when you say the government should stop borrowing, but the government does need funds to run the country, pay salaries and, take up projects, where should the funding come from? Except you're asking taxes, obviously, which is the next source of revenue, should be increased.
I hear you. You're talking about borrowing to pay salaries. That is the worrisome aspect. So
but it's our reality for now. It is our reality for now.
Yes, it is a reality. When you have an emergency situation, you take emergency actions. Now, let me also mention very clearly, we have always argued very forcefully that we should reduce the cost of governance. We should reduce the cost of governance. So if you look at what is happening recently, people have alluded to that. If you look at the actions, I won't say the actions of government in terms of the types of funding, expenditure on certain items, and you now match that against what is happening to the people of this country, people are beginning to ask, must you borrow money to do all of these things? And there's transparency, issue of transparency in governance. It's very important. If you say you borrowed 100 billion, can you show us the benefits of this amount that you have? Can we be transparent? Tell us, let us see the benefits in concrete terms that is verifiable. That is the issue. But I was just mentioning the issue of cost of governance. let us reduce the cost of governance. Oransoye report, is nowhere to be found after several decades. Can we reduce the cost of governance? Must we really borrow? If we don't borrow in 6 months' time, are we going to really die? And the answer is no. So let us rethink. Let us step back and rethink the model and say, yes, how do we better approach this issue?
All right,
we talked about revenue diversification. We've talked about diversifying the productive base of this country since 1986 during the Babangida era. We talked about diversification of revenue. What are we doing here? We're just focusing just on oil and gas and all of that, and then borrowing. So for how long are we going to be borrowing? We are going to ultimately compromise our sovereignty when we expose ourselves to excessive borrowing. Investor confidence is going to be affected.
All right,
These are realities.
All right,
yes.
Prof. We really have to stop it there. Thank you so much. Nigeria should stop borrowing at least for 6 months. I think that's one clear message you're sending this morning, Professor Emmanuel Abolo, Professor of Managerial Economics. Enjoy the rest of your day.
Thank you.
Let's take a break. When we come back, we'll head to the market just before we head back to the Sunrise Daily Studios. And just in case you missed the stock market report yesterday, we'll give you a bit of closing numbers from yesterday's markets in Nigeria. The all-share index is still in the red at the close of trade. It dropped 0.09%. And the equities cap is still struggling with 56 trillion naira. Really close right there. If we have another negative today, most likely we will head back to 55 trillion naira, because yesterday 49 billion naira was shaved off the market. Imagine if that happens again today, then we'll have a 55 trillion naira market cap for the country. Activity, we see it was all red yesterday. Deals that we had so much hope on had dropped from 9,000, almost 10,000 to 8,500. Value down as well as volume at the close of the sectors. Banking is still in the red, consumer goods red, industrial goods red, insurance. The penny stocks that were up the day before closed in the negative yesterday, and oil and gas back to its, certain stage. Top gainers yesterday, Como came out of nowhere and did some magic, gained 10% at the close of trade yesterday. John Holt also did so well, 9.79, as well as Conho PLC. Top losers, Owen Dole. What was going on? All this conversation about crude, that we had yesterday, it's not affecting the oil and gas, or expectations from Dangote, the PMS that is expected from Dangote from next month. Is that also a part of it? I wonder. It would be good to delve into that one of these days. Top trades, Transco, GTCO, and Veriscap also. Now, looking at the fixed income, Treasury bills market, secondary market yesterday recorded a calm session, bullish undertone, pockets of demand on the long-term end, with emphasis on June 17, 2025, OMO at the close of trade. The maturities, a handful of trades were also consummated at the 22%, 20.22% level. So you want to imagine why the NGX seems to be, getting less attention at this time. You just look at the rates at the fixed income market. By the close of trade, average closing rate increased by 63 basis points because of sell-offs on 270-day papers by some market participants at 21%. It's expected to continue again today. Let's have Bosun Obembe now join us to give us some perspective to this. Good morning, Mr. Obembe. Thank you so much for your time.
Good morning. Thank you for having me.
So it was quiet yesterday after the whole movement on June, on the 24th. That was on Monday, that auction. But it seems the market has gone back to a lull at this time.
Yeah, so what we see in the market is, the market is driven by liquidity. So the system liquidity is over 900 billion. So what we've seen is a lot of interest from investor trying to pick up some of these treasury fixed income instruments at this higher level. Today, there's an NTB auction going on. We have about 128 billion across the standard tenor. So we have 29 30.8 billion on the 91, 30.6 on the 181 papers, and the 364 paper we have 168. So given the system liquidity, we expect that there will be oversubscription at this auction. We expect the stop rate to still remain relatively similar to what we saw at the previous auction. On the long end, which is the 1 year paper, we expect that the rate will close almost the same, maybe 20.5.
Wow.
Demand.
Okay, thank God. Yeah. So, Mr. Bebe, help us to tie. We were talking about debt just before you came on, and we see domestic, the government seems to be embracing, domestic borrowing. Help us tie that with the market at this time, especially, sometimes it seems the numbers, when we have economic conversations, they are standing on their own. So help us to understand the tie back between these numbers and activities in the Treasury bond and Treasury bonds and OMO to the issue of debt.
Okay, so for the debts, if you see the publication from the DMO, it was driven by the securitization of the ways and means. So if you notice in the first quarter, there were a lot of when we have this kind of auction, DMO was selling over 1 trillion. But I don't expect that to happen at the bond auction on Monday. There was an under subscription, so DMO was willing to do about 450 billion. They were able to just raise less than 300 billion, so which we expect that they might cover from today's auction. So borrowing is you need to actually borrow to finance your debt. In the interim, I believe, given the increase that we've seen from the foreign from the FX rate from reserve, and some of the cheap loans that the government has been able to secure from the World Bank, I think the domestic borrowing will start coming down. The issue that we should be thinking about is the debt service, because the rate at which this instrument or issue is quite high. So, and when you are looking at in the next 1 year, when some of these instruments start maturing, the government has to repay. So I think borrowing is normal. So that's what I would say.
But Mr. Bebe, please, just briefly, but when you compare the debt servicing for this domestic to if it was international borrowing, it's still lower, yes, for the servicing?
Yes, it is, because when you look at the foreign borrowing, if you are not earning so much foreign exchange, so and you are borrowed in foreign currency, so by the time maybe there's a depreciation, then that means you have to pay more. So, but if you borrow domestic, you cannot. You are the one printing. You can still print, unlike the foreign borrowing where you cannot print the dollar. So let's say you're borrowing in a foreign currency, so you have to actually look for that money to actually repay. But if it's domestic borrowing, you can still find a way to restructure it, or you can work with the CBN to actually find a way that you don't default. So I think the borrowing is something that is used to stimulate the economy. It's just borrowing for something that is will be very productive, which I think the government has been doing.
All right, thank you so much, Mr. Bosso Bebe, for your time. Fix the come dealer with Access Bank.
Thank you for having me.
All right, do remember 1 p.m. Ladi Williams will be here with Will Ibong to give you fresh market numbers and perspective. 55 minutes, a whole lot. You want to join them at that time. Mini John Mekwa, let's head back to the Sunrise Daily Studios.